The June Monetary Policy Committee meeting has been one of the more interesting ones in a long time. We're at the cusp of a turn in the rate cycle, and that's always interesting to watch. And it's not an open and shut case. So what you've got in terms of expectations in the market, the Bloomberg poll suggests that the expectations are split. 14 people polled have said that there will be a 25 basis point hike in the repo rate, which will take it to 6.25%. 29 say that there will be a status quo in rates, but even within that 29, there are people who say that there'll be a status quo which will come with a shift in stance from neutral to withdrawal of accommodation. So those are the range of expectations in the market. Remember, the market has already been under stress, and borrowing costs, whether you're looking at the bond markets or the banking markets, have already been elevated. You've seen quite a significant hike between April and June itself. That is reflective of an expectation that rates will start to rise. Also, fiscal pressures and reluctant PSU bank buyers in the bond markets. The reason I mentioned that is because if you were to get a rate hike in the June policy, it would need to come with slightly softer communication, perhaps, so as to not spook the bond markets even further. So what is being called as a dovish hike may be delivered. On the flip side, if there is still a pause in rates, then it would come with a hawkish stance, suggesting that rate hikes are imminent, perhaps as early as the August policy. What are the macro factors at play? Where core inflation continues to be the core concern at about a 4-year high of 6%. The MPC will look very closely at that core inflation number, see what the momentum of inflation has been after stripping out base effect, etc. But even at the headline level, at 4.58%, headline inflation seems to be moving further away from the midpoint of 4%, which is the MPC's target. Remember, that target is a band, 2 to 6%, but the midpoint is 4%, and the MPC is yet to meet that 4% midpoint. So credibility perhaps also an element in the decision of the MPC. Now, since we've got those April numbers, which is 5.9 on the core and 4.58 on the headline, we've already seen crude prices go up even more. There's been a 12% increase between the April policy and the June policy. That will feed into headline inflation. There's also been a depreciation in the Indian rupee, which will also add to, again, inflation pressures. But on the rupee, there is also the question of whether the MPC, or in this case, actually the RBI, wants to use the rate defense to protect the currency, as other emerging markets like Indonesia have done. That too will be an input into the MPC's final decision this week. Now, remember, you may not get a verdict which is entirely one-sided, so you could see the MPC being split. We already know that Michael Patra had voted for a rate hike in April. Viral Acharya, the minutes of the April meeting showed, wanted to move his stance to withdrawal of accommodation in the June policy. Does that come with a rate hike vote? We need to watch for that. Chetan Khate is the other person who could move into the tighter monetary policy camp because he talked about structural pressures on inflation going by his inflation models. Ravindra Dholakia, Pamidua have been relatively dovish, so may not quickly switch into the rate hike camp. Urjit Patel has been very tough to read. You could get a scenario where the committee is split down the middle, in which case, remember, Urjit Patel has a casting vote. Will he need to use that casting vote for the first time in the short history of the MPC? Will be very interesting to watch as well.